Hello, friends. Happy Thursday. Welcome, welcome. Let's see. Let me make sure everything's working the way I would like it to work. I hope you guys are all having a great week. I missed you guys last week. I hope you missed me. I think I had the flu. I did not have COVID. I took a COVID test, but I was on it was not good. I had a fever. I felt lousy. Like I have not been that sick in quite a long time. So that was unfortunate. But now I'm feeling better. I still have that annoying cough. I don't know if any of you guys get that, but like no matter whether you're sick for a day or a week, but you get this dang cough that just does not go away. And it's just annoying. So that's where I'm at. So hopefully it's not too bad today. I think as long as I kind of talk slow and drink lots of water, hopefully we're good. So we will, we'll see how it goes. So today we're talking about maximizing. We're talking about, what are we talking about? Where's my title? What did I call it? Common tax deductions for small businesses. Does that sound good? Sounds close. Where's my title? Yeah, common tax deductions for small businesses. That is what we're chatting about today. So we're going to talk about, maximizing savings with, overlooked deductions and how to properly kind of document them and make sure that as a business owner, you're taking advantage of the deductions that are available to you. If you're new here and you're wondering who the heck I am and why you should listen to me, hi, I'm Bree Beers. I am I have my glasses on. Sorry, guys. I try not to wear them when I'm live with you guys because the reflection is, at least it's distracting to me. I don't know if it's distracting to you guys, but I'm Bree Beers. I am a CPA, certified tax coach, advanced tax strategist, a fractional CFO. All those things mean I took some tests or some courses or passed, some classes. And so I get to call myself all those things. But where I really hang my hat is on my 20 plus years of experience in accounting and my 14, I think, tax seasons. I can't remember. I think that might need to be updated. I feel like I've been saying 14 and now we're in another tax season, but you get the gist. 14, 15 tax seasons, whatever. And also the big other thing is my 7.5 years as a business owner. A lot of people in the tax world and even the accounting world, they, advise and they come to you and they help you from a place of tax and accounting experience. Whereas I can kind of intersect that knowledge with being a business owner, right? And I understand that struggle in that totally different realm of what we're going through. And so out of the 7.5 years that I've been a business owner, shortly after I took over my firm, I really started learning and getting into the tax code from the side of the tax planning, the tax strategy, the loopholes, right? How do we legally and ethically minimize our tax bill in a way that, we don't get in trouble. We're doing it the right way. We're following the rules. How do we do that? A lot of times we think of the tax code and the tax rules as reserved for the rich and the wealthy. And I say that with a chuckle because I know that our government right now is dealing with the budget and changing, trying to pass some tax changes. That's a conversation for a different day. I'm going to give you the same spiel I've given for the last 2 years, in that the tax code that has been around for, decades is built for small business owners and real estate investors, guys, all of us from, small to large. The reason we feel like it's made for the rich and the wealthy is because those are the people that have the resources, the staff, the people to, utilize all of those strategies and make sure they're, staying compliant and maximizing those to the best of their ability. What we're trying to do at Bree Beers and Associates is take some of those easier, we call them lower hanging fruit, tier 1 strategies, and share them with the masses, right? How can all of us as small business owners take advantage of these tax codes and these benefits? All right. And the way we see it, right, if we as small business owners can use the tax strategy and tax planning as a first step, right, we can it's kind of the first step to the working in the middle class, building wealth, right? If in 2025, your business makes the exact same amount as it did in 2024, but you're able to cut your tax bill by a couple $1,000s, that's kind of like giving yourself a raise without actually working more, right? You didn't have to make more money, but you have more money in your pocket that you can then reinvest back into your business, into yourself, into your retirement, into your kids, into wherever you want it to be. All right, so that is where our goal is. All right. I'm going to do my best to sip on my water so I don't start coughing in your ear because that is disgusting. All right. So today we're talking about common tax deductions, and how we're going to approach this today, you guys, is I'm going to start with the ones that are like the most direct to running a business, the most, what you might want to say most obvious, right? Like I'm going to go through this core of deductions first, run through some of those. And those are the ones that you're going to be like, yeah, that makes sense. That makes sense, right? And then we're going to go to this next layer. And those are the ones that when I say them, they're still going to like, yeah, that also makes sense. Not quite as direct as group one, but still makes sense that that's a business deduction. Then we're going to go over some commonly overlooked deductions. All right, these are ones that maybe you've heard of, maybe you're utilizing, but we're not sure if we're doing it right. Maybe we're not sure we qualify, those kind of things, okay? And then we're going to end with my favorite, which is our lifestyle deductions, right? These are the ones where how do we take the dollars that we are spending on a post-tax basis, money that we're spending on our personal money on, how can we take some of that and shift it and run it through the business legally and ethically so that it can become a deduction and become a business expense and a pre-tax, using pre-tax dollars. All right. And then we'll end by coming at some best practices, because a lot of times that is the reason we are not utilizing all of these deductions, right? We've heard of them. People tell us we should be doing them. Yeah, that sounds great. But we're like, I don't know how to do it, right? I don't know how to follow the rules so that I take it the right way, right? So we're going to end with that. All right, sound good? Cool. Right, so we're going to start with that core group of deductions, right? And these are the ones that, like I said, I'm going to go through this list and you're going to be like, yeah, that makes sense. And we're starting with these because these are the ones that these expenses essentially wouldn't exist if you didn't have a business, right? These are the expenses that this is the money that you're spending in order to produce the good or service that you are providing for your customers. All right, there it is. So when we talk about if you are providing goods, right, you know me, I like to use the t-shirt people, the t-shirt company, everything related to creating those t-shirts and getting those t-shirts to your customers, business deduction, right? So the cost of the shirt, the cost of the printing press or the Cricut, the cost of the printing materials, the ink or the printing vinyl, right? Also the cost of delivery, right? The packaging, the boxes, the wrapping paper, the tags, everything that goes from the minute you decide to make a shirt all the way till your customer gets that shirt or that good, that's all your business expense. Makes sense, right? Labor, if you're hiring people, right? To maybe you've outgrown your basement and you're, working in a little factory, you hired a person or two. Those labors and wages to, have those people help you out in your business. That's a business deduction. If you're in the service industry, a little different, but same thing. I'm a tax preparer. Okay. So I need tax software. I need a mailbox so that clients who still mail their documents have a place to send them. I need different softwares like Adobe and MailChimp in order to send things to my clients, right? All of these costs I need in order to provide tax services to my clients. Okay, all business deductions. So the cost of the goods or the services provided, any labor or wages related to hiring people and having people help you out, whether it's directly providing those services or maybe within an administrative position, all business related. Software and subscriptions. Now this one gets not tricky, but can grow into the next layer as well. And we'll talk about that because when we think about software and subscriptions, we immediately think of the things directly related to running our business, right? So the tax preparation software, maybe the project management tool, QuickBooks, right? If we're using QuickBooks or Xero or Wave in order to keep our accounting, those all make sense. All right. But there's another section of software and subscriptions where when we talk about 2 weeks ago, we talked about ordinary and necessary. We also talked about reasonable. So we're going to talk about some other softwares and subscriptions that I get a lot of questions about, like, is that a tax deduction? Because I don't technically need it to run my business, but so we're going to fill in the blanks and move. That's going to be in the next section. Okay. So softwares and subscriptions, office supplies, right? Papers, pens, printer ink, anything like that. Utilities, insurance. Most of us need some sort of either general liability insurance or professional liability insurance in order to operate our business. All right. So all of those are what we call like the core. When I tell you that these are business deductions, you're like, yes. In order to run my business, I need to spend this money. That makes sense. All right. The next layer is still going to make sense, but it's like, this is where we start to get people like, that is a business deduction, right? It's not so much, is it? It's like a confirmation, right? And so this is where we're talking about like rents and lease payments. A lot of times I get new clients who are like, well, technically I don't have to rent out this space. I could work in my basement. So maybe it's not ordinary and necessary. Very ordinary, right? Very ordinary for anyone with a business to have some sort of office space or warehouse space, to be renting space to run their business, right? Most of us start within our house because that's cost effective, right? But as we grow or as we start to get money in, not all of us want to work in our house. Some of us love it. Some of us need that separate space to move into, to grow, to maybe have the tools and the resources that we need to run our business. All right. Few other like, this is a tax deduction, right? So there's marketing and advertising. All right. So we talked about the software to actually provide our goods and services, but what about the softwares to grow and market, right? Our social media, our Canva, our MailChimp, website costs, ads, anything like that. Yes, ordinary and necessary, right? Very common for any business who's trying to make profit and grow to have marketing and advertising expenses. And anything related to marketing and advertising runs through that business. It's a deduction toward your business. All right. So I think our paid ads, social media, website, graphic design, branding materials, right? Getting your logo put together, all business expenses. Licensing and permits, all of it. If you start an LLC or a corporation, you're going to have state requirements, business license requirements. You might have industry certifications. All make sense, right? That if you need it in order to operate your business, we're going to deduct it. Professional services, hiring an accountant, an attorney, a business coach, a consultant. That's when so many people are like, ooh, I want to hire a business coach to help me figure out what I'm doing wrong or figure out what I can be doing better. But I don't need it, but I think it'll help me, right? But if you can ask, does this serve a business purpose? And your answer is yes, you're solid, okay? So like I said, any sort of those professional services, and then on that same token, continuing education, courses, certification, books, workshops, webinars, all of those things. I opened up this training talking about all the certifications and titles that I have. All of those came with a fee, right? I had to take a course, I had to take a workshop, I had to take a test, something, right? All of the money I paid to get those certifications, those are business expenses. All right, this is one where, yeah, this makes sense. It's like, okay, that's a business expense. I got it. It's important. This whole section, guys, with continuing education, professional services, license and permit, marketing, the question to ask, is this related to my business? Does this have a business purpose? Because sometimes, right, this can overlap with personal or with something different, in which case that part's not going to be deductible, right? So it's attorney, for example. Not every meeting with my attorney is a business expense. If I'm meeting to talk about my business structure, if I'm talking about, possibly I don't know, suing someone or getting sued, or I need a business contract reviewed. Yes, all of those attorney costs, definitely business related. If I am going through a divorce and it has absolutely nothing to do with the business, not a business expense. And there's some overlap, right? Because within that divorce, maybe separation of the business is part of it, right? So there is sometimes some shared expenses, but generally speaking, the question to ask is, does this have a business purpose? Okay. And that's a great question to ask with the continuing education as well, right? I'm a tax accountant. So obviously anything I'm taking in tax and accounting, yes, business purpose. But what about a marketing class? Well, if I don't have a marketing team and I'm needing to do my own marketing, then yeah, that's a business expense because I need to market my business. If I have a whole entire marketing department, but I want to take a marketing class, why? Right? Like the question is why? Is it driving your revenue? Is it driving your business purpose? All right. So our next section is our commonly overlooked deductions. All right. And these are the areas where either this is the area where a lot of business owners aren't taking these. All right. So this is an area where either you're not spending the money and you could be, or possibly you're spending it and you just aren't thinking that it's a business deduction. All right. So we hear about our home office deduction. So a portion of our home that's used for business use, we can deduct a portion of all of our home expenses based on that percentage. Boom, we got that. Business loan interest and bank fees. People miss this. And this is one of those reasons why we always suggest, okay, first of all, separate business bank accounts. We'll talk about best practices at the end. But when you have everything running through its own account, real hard to miss, credit card interest, bank fees, things like that, because it's all going through that business bank account. But if we're commingling, really easy to miss. All right. Employee benefits. If you have employees or even just yourself and you have health insurance, if you have retirement plan contributions, maybe some wellness programs you've implemented, those can be run through the business and be business expenses. This is an area where I have business owners who don't have employees who miss these deductions. All right. If you have health insurance, it's not paid for by you're an outside employer or by a spouse's employer, right? If you have to pay for your own health insurance out of pocket and you are self-employed, all right, it is a deduction. All right. If you are contributing to your retirement plan, right? If it's just me, myself, and I, everybody out there can contribute to a SEP IRA. All right. There's a few other options too, but this is a great example. All right. It's money that you make out of your business. You can contribute to your retirement, and it's a business deduction. All right. You just got to make sure it gets reported right. And then depreciation, that's one that gets missed because people don't understand it. So when you buy major assets, basically anything over $2,500, you guys. So some computers, furniture, equipment, right? Okay. So especially when we're like in manufacturing, maybe you're making cabinets or you buy a big, printing press to do something, all of those, there's rules on when you can expense it. You have to expense it over time. You don't get to, if I go buy a $10,000, I don't know, let's say I'm cabinet making and I go buy a $10,000 cabinet making machine. All right. The general tax rule says, no, you don't get to just take $10,000. You have to take a portion of it over the life of the machinery. All right. So if the machinery is 5 years, that's what the IRS says the life is, then I get to take $2,000 of depreciation expense over each of the 5 years. There are so many accelerated bonus beneficial rules to that, like exceptions, but generally speaking, but people miss that. Okay. And then our last section, you guys, is our lifestyle deductions. All right. This is the area where so many people, we hear of people taking advantage of these areas, but more so we get taxpayers who aren't utilizing these enough. okay, aren't utilizing these things enough. And excuse me. And this truly, like most of these lifestyle deductions, this is the epitome of moving post-tax spending dollars to pre-tax spending. All right. And so we're networking and memberships, right? So if I'm joining a chamber of commerce, maybe a trade association or a network group, I'm doing that with the intent of networking and building my relationships and finding clients or referral sources. Absolutely, that is a business deduction. But sometimes we don't think of it as that because there's some fun involved, right? Like we might go to a chamber of commerce and there's, it's a dinner event, or maybe we're meeting at Topgolf. And as long as you're not paying those places direct, like I'm not paying Topgolf directly, I'm paying my membership or my networking group, those are business expenses. Why? Because the purpose is I'm trying to build my network. I'm trying to build relationships. All right, gifts. You are allowed to gift, to provide business gifts to anyone, clients, vendors, anyone business related. The stupid part to this, you guys, is that there's a threshold of $25. And this $25 threshold has been in place for as long as I have been in tax accounting. So you would think that this would go up as, inflation goes up, the cost of doing things goes up, but no, it's still $25. But it's still there, right? So if you're sending maybe Starbucks gift cards for referrals to people, or you're maybe sending, I don't know, that's the main reason I send out gifts, or you're just sending thank yous to clients for their appreciation. Up to $25 of that is deductible. All right. Hopefully that gets extended. Like that, I feel like that should be at least $100, but that's not my call. I do not work with the IRS or in the government. So the other lifestyle deductions, we've got the three that I believe are most underutilized, at least when I see new clients come into our firm and start working with us. First of all, is business meals. All right. When you are going out to dinner and talking to people about business in any capacity, it is a business deduction. You only get there's a 50% limit on those deductions, but that still adds up. And so guys, this is meals with clients, potential clients, customers, employee engagement, vendors, potential vendors. All right. And the kind of a piece here is sometimes you go out for meals and they don't start with a business purpose, but maybe they end with a business purpose. And as long as there is a business purpose by the time you end that meal, it is a business deduction. All right. A great example is a realtor. Okay. If you're a realtor and you're going out to dinner you're getting together with friends. All right. Friday night, that was weird. I hope you guys are still there. Like my whole screen just flashed. So we're going out for dinner with friends. It's a personal dinner. We're just planning on having, just having dinner with our couple friend. Okay. However, dinner starts, appetizers come out. Friends like, oh yeah, I think we're thinking about moving. We're thinking about moving, later this year. Oh, cool. Do you have a realtor? No, I don't. Cool. We talk about real estate. We talk about that option. Hey, I am a realtor. You already knew that. Taking on new clients. We start talking a little bit about business. We don't have to sign a contract. We don't have to, start looking at houses that night. But that has just become a business meal because now I now have a potential client out of that. All right. So business meals, huge opportunity for people to maximize more deductions out of here. Same with going out for drinks, right? It doesn't actually have to be food. It could be drinks as well. Going out for drinks with colleagues, you find out, again, real estate, you're a real estate investor or a real estate broker, and you find out they're looking to sell their house because they're moving out of state. Oh, who's selling your house? Oh yeah, we don't have a realtor yet. Cool. I would love, let's chat. I would love to have that conversation and see if I can help you out. Cool. That can be the extent of that conversation. All right. But I just turned what I thought was drinks with friends into a potential client, right? So that is a huge place for opportunity. Another place that I get, like, if you are a small business owner, I firmly believe you should have business travel on your P&L. All right. You should have deductions for business travel. So what does this look like? It looks different depending on who you are, what your industry is. But the easiest, most simple one is going to any sort of professional conference, networking event, or training out of state. All right. And no matter what industry you are in, there are conferences, trainings, and networking events built for you. All right. Even if your business is YouTube, creator, there are things out there. All right. So let's give an example of very direct, very cut and dry business travel. All right. I am an accountant. There is QuickBooks Connect is an annual conference that goes on every single year. All right. QuickBooks Connect, it is a 3-day conference. I don't remember if it really is. Just go with me. It's a 3-day conference. And this year it's in Vegas. It's not. Let's just say it is. All right. I decide I want to go to this conference. So yeah, my ticket to go to the conference, business deduction. My flight to and home from the conference is a business deduction. My lodging while I'm there is a business deduction because I am flying out on Monday. The conference goes Tuesday, Wednesday, Thursday, and I am flying home Friday. That contained trip right there, all business. Everything I spend from the time I leave till the time I get home is a business deduction. All right. When it comes to flight, lodging, food, transportation, right? Do I have to take lifts around town, taxis, Ubers, whatever? If I have baggage fees, if I have to pay for Wi-Fi, everything that has a business purpose is deductible on that trip. No entertainment. All right. Yes, while I'm there, I'm going to go catch a show, or I'm going to, probably if I'm in Vegas, I'm going to catch a show. That's not a business deduction. All right. But everything else is. The conference ticket, the flights, the lodging, the transportation, baggage fees, Wi-Fi, you name it. Okay. Now, how we can take that a step further. Let's say QuickBooks. Okay. So let's say QuickBooks is in Vegas, but my husband also wants to come and hang out in Vegas, and we want to go early. We want to go and spend the weekend together before. All right. Adding on a personal trip does not negate the trip from being business related. You just have to divvy it up. So what that looks like. So same thing. My conference is Tuesday to Thursday, but Travis and I, or my husband and I, decide to go out Friday night. All right. So we decide to go out Friday. We're going to hang out in Vegas Saturday and Sunday. He's going to come home on Monday. I'm going to do my conference on Tuesday, Wednesday, Thursday, come home Friday. What's a business expense and what's not? All right. My flight there and back, the full 100% for my portion, my flight is deductible. Even though I'm going out early, I have to get there. Whether I go out Friday or I still have to get there. So my flight, 100% deductible. His is not. He's not an accountant. He's not going for any reason. He's just going to hang out. His is not. Okay. Lodging. The lodging from the day before I get there till the day I leave, that lodging is deductible. Those extra 3 days in advance, that's not. That's going to have to go. That's going to be personal. All right. But let's say Travis ends up staying with me the whole time. Let's say he does stay in Vegas and he just kind of hangs out, he golfs or whatever. I do not have to only take half of my lodging for the time that I'm in the conference because he's staying with me. Because again, I would need the lodging for those 3 days, whether he was there or not. So the lodging for the time I'm there for the conference, 100% deductible. All right. My meals for the time of travel day, conference time, travel day, deductible. meals for that time when Travis and I are hanging out, with my husband and I are hanging out before, not deductible. So you got to see where it comes, where the break is. All right. For the time you're still there for work, yes, business deduction. Anytime added on before or after, not. All right. This is definitely an area, if you're trying to utilize this and maximize this, a tax advisor is going to be able to help you. But it's a way for a lot of us to we can find a conference. Let's say we've always been dying to go to San Francisco, right? Let's say Travis and I are like, yeah, my husband and I, we really want to go to San Francisco. We've never been there. I find a conference. We go up, we go up early. We do our hanging out. I stay for the conference. I create some business deduction through that planning. All right. So business meals, business travel, and the last one for lifestyle deductions, I'm a little over my time. Sorry, guys, is vehicle use. All right. So business use of your vehicle. This is different than if you have a vehicle that's fully used in your business, right? If you are a plumber or a contractor and you have a truck or a van that's your truck or work van, that's different. Okay, that's a business deduction. No brainer. But again, I'm going to be a realtor because that's what my husband is. That's what I know. All right. So my husband's a realtor. He has his car, right? But he uses it for business. He does not have a separate car that he only uses to go do showings and meet with clients. And then a car that he drives the kids around in, right? He has one car, personal business use. The business portion of that car use is a business deduction. All right. So which some things are obvious, right? Going to showings, driving to real estate trainings, driving to closings, right? That mileage makes sense. But what about my mileage to a client dinner? What about my mileage to meet a potential client and figure out if we're a good fit? Yeah, all of that is too. So circling back around to business meals, truly for every business meal that you have on your books, you should have mileage because you had to get to that meal and back. All right. And vehicle use can get a little complicated because there's standard mileage rate or there's actual expenses. That part gets a little muddy. And I recommend 100% that you utilize a tax professional. But at the very least, standard mileage rate, all right? You're tracking your mileage in an app, Mile IQ or Mileage IQ. That's what Travis uses. That's what most of my clients use. Super easy. If you turn on notifications, every time you get home, there's going to be a swipe right for personal, swipe left for business, or vice versa. I can't remember, but it's going to remind you, hey, you just drove. Was it business related? Yes or no? And it tracks your business mileage. All right. You can be responsible and turn your notifications on and have it remind you every time you get home. Or you can be like Travis and wait for your accounting wife to be like, hey, I need to do your tax return, and then spend a day or two just swiping through all of your driving for the year. I don't recommend that, but I know a lot of people, that's how they do it. So to each their own. But we do get a lot of people like, oh, I didn't check my mileage. It really wasn't that much, but you would be surprised. Okay. Especially, I think we're sitting at 67 cents a mile. All right. So what that means, you guys, is even if you only drove 1,000 miles, all right, you drove which is very low. All right. Let's say you just drove 1,000 miles. That's a $670 deduction. That's an expense on your business without any cash actually going out of your business, out of your account. Right. So, yeah, so it's worth it. It's worth it. Your vehicle use, like tracking your mileage, is not hard. All right. It is not hard. It's just training yourself to do it. All right. So we are going to end with just some best practices, common mistakes, right? So we've gone through and you're like, yes, I want to be tracking my mileage. I want to be taking more meals. I want but I don't know how. I don't know what to do. So first and foremost, most of you have this covered, but for those of you that don't, you must have a separate business, separate your business and personal finances. All right. There is no commingling. There is no going, if you're doing it, this is you now know better. So you are not going to do it anymore. All right. If you do not already have a business bank account and or business credit card where you run all of your business activity through, you are going to the bank this week and you are opening that account. All right. For most of you, you already have that going, right? You already have that going. Most of us, I know, are guilty of occasional intercommingling, right? It just happens. You're out without your business card, oops, or you're out for personal reasons without your personal card. That's me. I get in trouble for that. But the occasional intermingling happens. Accidents happen. We fix it. But generally speaking, 99% of the time, all of your business expenses are running through your business bank account. All right. That's number one. Number two, keeping receipts and records. All right. When we're, when we're first starting out, a lot of times it's a spreadsheet, right? And that's fine. But as soon as our cash flow and our income allows it, we've got to get into some sort of bookkeeping system. QuickBooks Online, Xero, Wave, I don't care, but something that integrates with your bank account. So it just pulls your banking information. All right. So you or your bookkeeper, because first person I always tell people to hire is a bookkeeper after an administrative assistant. All right. And so that you can see where all of your money is going and where it's coming from. Okay. And then keeping receipts and records. We are told, right? I have seen audits pass with just bank statements and credit card statements. All right. But that is not the IRS rule, and that is not best practice. Best practice is keep those receipts. So what I tell people is take a picture. Like if you have QuickBooks Online or Wave or Xero, you can take a picture of your receipt and immediately just connect it, upload it to your QuickBooks or your accounting software. Super easy. All right. Because yes, your bank account tells you when you spent, or your bank statement or your credit card statements, they tell you when you spent the money, they told you where you spent the money, and they told you how much money you spent, which is a great start, but it doesn't tell you what you spent it on. All right. And if you ever get audited, all right, knock on wood, 0.01% of returns actually get audited. So don't freak out. But if you ever get audited, it's likely going to be 2, 3, 4 years down the road. You are not going to remember what you bought, or what materials or what you spent your money on, right? Even if you look at the date and the place and the amount. Okay. So receipts are important. You missed a few, it's not a big deal. This is like best practice. All right. The other piece is a calendar. All right. So meals and travel. If you ever get audited, these are the two areas that are going to get the most scrutinized. But if you have the support, you're going to keep it. So what that looks like, you guys, is again, receipts are great, very vital for these two categories specifically, but a calendar as well that ties to those receipts. So it can be your Outlook calendar, your Google calendar, but when you're having those meals, even if they're impromptu, right? Even if it was drinks with a friend that turned into business drinks with a colleague, go back, add it on your calendar, say and it's simple, right? Who did you meet and what was it for? All right. Because your calendar is already going to tell you when, right? It's going to tell you the when. And then you're going to go in, you're going to say, I met with Joe Smith, potential client. That's it. That's all the support you need to show that business purpose, right? It does not have to be complicated. All right. So that is that. Thank you for staying late with me. I'm so sorry. For those of you that are here, I think someone just told me that the link is broken, so I will get it fixed. But in the comments or in the caption, there is a link. We are closed to new clients for tax season. We're good. It's good. So if you need your taxes done, we're not your people for this year. But if you want to work with us, the next opportunity to do that will be for 2025 tax planning. We offer free tax analysis. That's kind of our intro to you to see if we are in a place to help you and your business with tax strategy. That opens up in May. There's a link to the wait list. I will have my assistant fix that if it's still broken. So if it's still broken, oh, nope, here we go. It's fixed. Okay. great, it's fixed. Get on our wait list and you will be the first to know when that calendar opens so that we can get that free tax analysis done for you. All right. Thank you guys. Next week, it is the first Thursday of the month, so it is Q&A. So come live, bring your questions and don't bring your answers. I'll bring the answers. Bring your questions for, come in, put them in the chat. If for some reason you can't make it live, feel free to DM those to me in Facebook Messenger. My assistant will collect those so that I can answer them on the live, and then you can watch it on replay. But the best way to do it is to come live, because I answer live questions first, followed by those of you that emailed or DM'd your questions in. Those take second priority. So yes, so thank you for that. I will see you guys next week, and hopefully this cough will be completely gone by then. All right, you guys, have a good day and have a good weekend. Bye.